Now, Tuesday, I had an interview with Charles Nener. Now, Charles Nener is one of the top timers in the world. He was a head of prop trading for Goldman Sachs. Here's a guy that's got a timing model that called the top in 2007 almost to the day. I was with him prior to the COVID debacle, and he called me and said something is going on, and he said, and I see 35% unemployment. I see oil down $4 a barrel or under. And this is before anyone even announced that we were going to have a shutdown, that we were having problems. He saw this on his charts. Charles always says, I know what is going to happen. I know when. I don't know why. Now, we talked Tuesday, and I'm going to tell you that was one of the most important videos I've ever had with him. It was a great interview. I'm going to put the link down below. I think you should take a look at it. It's a little long. It's a little intense. And oftentimes Charles says things, you have to listen to him because he just says things and you need to pay attention to what he says. And it always pays to listen when Charles Nener speaks. He is a very, very smart man. He's a very, very humble man. And he's oftentimes very, very right. So let's go over a few things that he talked about that are most important. Now, he's been talking about the war cycle for 10 years. Now, I've been interviewing Charles for 20. He's been talking about it for a really, really long time. And it's here. It's here now. Now, we talked about this on the video, and he thinks it's going to get worse. He thinks that the Ukraine war is going to kind of slow down for a little bit, doesn't think it's going to go away, which means for you and I, we need to pay attention to that and maybe think what we can do for our family. Now, if things get bad, now we're talking about tariffs and things in our world with now 200% on French wines from France and 50% tariffs on aluminum. If you need anything, you should probably get that for your house. Spend a little money and put in some supplies. Get some cash put aside. Because Charles is talking about a war cycle. Remember, Charles was living in Israel when the rockets were going over, so he has firsthand knowledge of this. And he says things are going to get worse, and the United States is not going to be immune. That's scary stuff. But what can you do for your family? Well, you need to start thinking that through. Do I have a safe place? Do I have water? Do I have food? Do I have extra cash? Do I have a little bit of gold? So think of those things. He also talked about the real estate market. Now, we've been talking about that. My timing models are similar to Charles. Now, they're not Charles. I'm an amateur. He's an absolute professional. But they coincide. We had talked about this privately, and for a number of years, he's been talking about the fact that he uses Lennar and Toll Bothers as a proxy for the real estate business. And they've dropped 50%. Let me go to my very first slide here so we can take a look at this. And you can see what I'm talking about. Here we go. Maybe I can get it even a little bigger. Now, just 6 months ago, Lennar was almost $185. That was when it peaked. Now, I'm not saying you're going to peak, but you had plenty of time to buy it in this range here. We did a video. He was saying, because we're in the real estate business, how do we protect our portfolios? He gave me great advice. You put puts on Lennar and Toll Bothers. Talk to your financial advisors, of course. Make sure that this works for you. But it was an absolutely terrific trade. Look at this. Here it is today, March 14th. It's at less than 118, and it's down, what, $60, $70? That's a 40%. That's a big drop. Now, the question is, how much of a proxy is that for our real estate business? And if it went down 40 or 50% on the stock, and Charles says it is not done yet. And he says the insiders are selling. And I'm going to tell you that my information that I get, and of course you'll just think this through, is when the builders need land in which to build. If you don't have a land bank, you need to have always, and you're always 2 or 3 years in advance because it takes a long time. You got to get permits. You got to bring in, sewer and water and electricity and bring in cable, and you've got to get it platted and bring in engineers. and it takes a long time to do that. So they're always a few years out. So they got very aggressive, of course, during 21 and 22 when business was so great they needed land. Well, they just filled up the truck with land, and land gives them nothing. It costs them fortunes. And as these are typically rolling over, they're not a 30-year fix. They're probably paying 8, 10, 12, 14% on this land bank. And it is very onerous. This costs builders fortunes. This is what takes builders down is their land bank. That's why they're so desperate to sell these things, because they're giving concessions everywhere. I'm hearing stories of up to $100,000 in some markets, and they're just trying to get out. They just want to get out of the land bank. So as long as they're not losing too much, they just want to get out, because if they don't get out, the land will take them down. That's what Charles is saying. So he says that the insiders are selling their stock in these companies, and the stock has dropped. And in a sideways, he's saying, now he's not coming out this, he's not doing fundamentals. He will not do fundamentals. But if you use it as a proxy, what's the value of residential properties? What someone's willing to pay for it, and what kind of income they're willing to generate. If you go back to my prior videos, you'll see that we talked about maybe here in Phoenix, Arizona, which is one of the top markets in the world, we might be overvalued as much as 30%. And if you look at this chart from Lennar, it's dropped 30 or 40%, right? I think it's closer to 40%. And Charles says it's not done. Now, if that's a proxy for the housing, that means housing is at grave risk. So what can you do about it? Well, you might talk to your advisors. If housing is still going down, maybe there's still time to do the puts. Now, I'm going to tell you, Charles offers a 30-day free of his research. You should take advantage of it. It's free. Always wants his phone number and an email to send it to you. He's probably going to call you, ask you if you want to continue, but he's not going to chase you. He's not going to ask for your credit card. Why wouldn't you do this? This is great. And maybe this is something that will save you some money, because, real estate is an illiquid investment. Now, we in my business, we quit buying when we started timing models. So we're getting ready to make the next buys, but we're waiting for events to unfold, and then we're going to buy. So maybe it's too late to sell. If you need to talk to your broker, you might want to find out if you've got a property that's not working. You may need to talk with him, because I think that as he's saying that we've gone down 30, 40%, proxy on Lennar and Toll, housing I think is overvalued too. And I don't think we've seen it. And let me go to my next slide. Let's just take a look at that, and then we can maybe talk about that. Let me go to this slide. Now, I'm going to tell you that if you follow Melody Wright, she was leading the charge on this and telling us long before anyone else is telling us, long before the Wall Street Journal came out with their article talking about the 1 million FHA delinquent loans out there that have been hidden and put underneath the rug by the Biden administration, so they didn't have to admit that things weren't so good. They went into remodification and forbearance, and they were literally making the payments for these people who were delinquent on their FHAs. They also, if you go to my other private videos, we talked about the fact that 43% debt to income ratio is kind of a ceiling for people. Well, the Biden administration let a lot of borrowers exceed that. They let so many, there was 63% of the borrowers since 2022 have been over 43% debt to income. Now I'm going to tell you, this is saying that 43% of your gross is going to your house payment. This is where foreclosures happen. And now we have 1 million homes delinquent. Charles Nener warned us that 10 months ago and said we can see it on our charts. Now, I'm telling you, I can see it on my charts that we have major problems coming. We already see it in commercial. It's coming to housing. Talk to your brokers. See if there's something that you can do. And if there is, sell a property, whatever. We've also talked about some endangered cities. If you're in Chicago, St. Louis, Milwaukee, Seattle, Portland, you probably want to look for better markets. They are out there. So let us know. Maybe we can help you. Let me just tell you once again that Charles Nener's work is outstanding, and that if you have an opportunity to get it, please take a look at it. Now, we're also talking about the economy. So if you follow my work and Charles's, now Charles, I'm an amateur. Charles is one of the best in the world. So let's just understand that. Charles is saying that we went into recession a while ago. We're already in it. And that famous saying, I'm going to tell you, I think this is Hemingway said this. How did you go bankrupt? Slowly at first, then all at once. And we're in that slowly at first phase. And then all of a sudden, you just recognize that everything is happening. That's when you start seeing layoffs and people losing their houses and their cars. When you pay $1,000 to $1,500 a month for your car payment, 4 or 5 years ago, $1,500 is a house payment. So things really need to resolve. Charles is saying we are in a major, major recession that may be worse than a Great Recession. Maybe go into a depression. And again, we're hearing those things from others, particularly Martin Armstrong. Talk to John Rubino. Michael Pinto is a good why guy. He tells you what's happening. He's got a great model as well that lets you know. But they're putting red flags out there saying things are not good. So what can you do? What should you do? Well, I'll tell you what I'm doing. I'm putting cash aside. I'm making sure that if I don't need it, I don't buy it. And that's just put that money into savings. I park my money into as cash and get as a cash equivalent so I can get an income off these things. I'm making sure we've got food and water in our house. We're paying down all our bills. We're making sure we're paying our credit on time because I am going to make a fortune when timing model goes off, because I think prices are coming way down. And then when that happens, we want to buy some properties. And I think rentals are going to be good for a really long time. So that's coming. So yes, we're in a big recession. It is going to last a long time, just like my model is predicting as well. I don't mean to put myself up there with Charles Nener. He's way better than I am. But it's also confirming that fact. And Charles thinks we've got plenty of time. So I keep reiterating that you need to stay safe and you need to live so that you can fight again. So what we want you to do is, save your money, pay your bills, protect your job, and we've got plenty of time to start buying some properties. Now, we have a goal with my seminars of $5 million, $15,000 in cash flow in the next 5 years. I think we can do that, but not yet. So we're looking at a time coming. Now, let me just, we also talked about the fact that he thought gold was coming to the United States. Now, and he said gold had moved before because they were concerned about the Trump election. Now that comes Trump's in power, and of course they're having problems. Europe is just making all this noise like they want to go to war. Well, gold is moving to the United States. Excuse me. Now, Charles said this very subtly, that people are moving their gold out of the war zone. I don't know if you caught that. So when you have a big war, people want it in the United States. And you're seeing gold is moving like crazy to the United States. So I'm going to recommend that you go back and watch our video that we did just Tuesday, just a few days ago. Pardon me. Now, here's another thing that I talked with him. We talked about this privately, was that in the last 16, 20 years, Janet Yellen has presided over some of the biggest borrowing ever. And we have 42% of all the debt ever created in the 250 years we've been a republic has been created on her watch in the last 16 to 20 years. 42% of all debt. And of course, this is exactly what Trump is talking about right now, is that we've got to get rid of this debt because it will sink us. It's just, government's no different than you and I. I mean, if you run up bills and you can't pay for them, eventually you go bankrupt and it just destroys you. So before we get to that point, you're better off to start paying all your debts. That's what I'm telling you now, pay off all your debts. But the government needs to do that too. They're saying that's going to happen now. Now, I'm going to tell you that there are $3 trillion in triple B bonds that are coming up in the next 12 to 18 months for renewal. A lot of these are from zombie companies, and there are a lot of zombie companies, like 30 or 40% of the Russell 5000 are zombie companies. They do business, but they don't make a profit. So they need to always be borrowing to keep running a business, because they're trying to get their business to the point where they're going to make a profit. They have income coming in, but they don't have any profit. So if those guys cannot get financing, they're going to go away. That's going to happen a big time. And there are trillions of dollars in bonds. So we're looking at a liquidity crisis coming. We're looking at a credit crisis coming. Goes right into Charles never says why. He always says what. But if we have those things, that is going to be a big what. Michael Pinto also talks about that a lot. So these are things that are certainly going to happen. And you just need to be aware of it and get out of the way. Now, depends on who, you should probably talk to your financial advisor too. As Charles says, it doesn't go down in a straight line. So there's lots of times that you can make money even in a bear market. When things are bad, it doesn't go straight down. So if you have an asset, there are better times to sell it. And maybe you can, Charles talked about trading gold for years. They made lots of money on gold. It would go up a couple $100, down a couple $100, up a couple $100, down a couple, and they would make money. Now you can do that too by using his research and talking with your financial advisor, because when you have this turmoil, it breeds enormous opportunity, and that's coming. So we want to make sure that we take advantage of that. It also considers, now here's in my business, and I think personally, I see a little bit of a window coming for long-term interest rates to come down. They're in the mid sixes now. They were up to almost 8. They're down to mid sixes. They could go down a little bit more to high 5s, but mid sixes probably not a bad rate. I've been in business 50 years. We saw 9 or 10%, and we saw it go below double digits. We thought this was a great deal. So, you're going to look at say 6% and say in 5 or 6 years, that was a great rate. Because Charles is telling us again, now he's talked to me year after year after year. He's been saying that we're coming to the bottom, then it's up. And he sees inflation coming, not for a while, but coming. And he sees much higher interest rates. So we're going to talk to you. If you want to talk to us, it might be a time for you to start thinking of doing some refinance, or maybe this is when you want to buy some properties. We need to make sure that they fit into the portfolio. But we need to look at long-term financing. And I don't think we need to rush right out today to do it. But I don't think we've got a big window here. So it's just something you might talk to your financial advisor, your mortgage broker, see what they think. But Charles, again, has reiterated the fact that he thinks rates are heading up. Makes perfect sense to me. So I understand that at all. Now, here's something. Let me go to this slide here so we can talk about this, because this is where we're at now. So I got this today again from Market Watch, and today the S&P 500 closed at a little over 5,600. Charles is saying it's going to go down. His first target is below 4,000 or below before year's end. Now, there's a great opportunity for you. If you agree, if you want to talk to your financial advisor and see if there's something that you might be able to do with that, but that needs to tell you that. So if you are weighted in the market, and we're thinking that maybe, just maybe, we're going to have, see where we're at here. Maybe, just maybe, this is coming down from here to 4,000 or below. Maybe you need to take some money off the table. Or, Charles was saying that you should maybe think of taking his free research, because he's got buy points that you can get in. So there are good times to sell and good times to buy, and optimal times. So if you think that the long term is down, well, what are you holding for? So you need to talk to your financial advisor. I'm not a stock guy, so you need to talk to your financial advisor and see how this works for you. Michael Pinto is someone great like that. He's been talking about that for a really, really long time. But I think we're in a super cycle. I think we're going to have a lot of debt is going to be resolved in a very, very bad way, which means liquidity is going to go away. and cash is going to be king. And those who can develop who can qualify for a mortgage is going to do very, very well. Let me go to my last slide here, and we can just talk about that. Now, this is me. This is where I'm at. I'm at the West USA Phoenix corporate office. I will tell you that they are a huge, huge company, billion-dollar firm. I'm working in the corporate office. I am a broker, but of course I work underneath their umbrella. They do all our back office work for us. If you want to discuss this further, I'm more than happy to. Give me a call here. We'll arrange some kind of a time that we can, I'll give you 15 minutes, see if this is something we want to talk about, if this is going to work for you. If you agree with me, maybe we can work together. If not, we'll part as friends, So I would say, if you like this, give me a big thumbs up and subscribe. Please go back and watch Tuesday's video with Charles Nener. It's 30 minutes, a little long. Listen to it carefully. He says lots of things. You have to really listen carefully, and you'll hear just some absolutely outstanding. I've been working with Charles Nener. I've been interviewing him for 20 years. I have just seen some amazing calls that he's made, and he is way more right than he is wrong. So when Charles Nener speaks, you need to listen. Anyway, my very best to you guys. Bye-bye now.